Hey, Matt, it's Monday. I almost said happy Tuesday. Happy Monday, Matt. How are you?
Boy, that one day in 1 week really threw you off, did it? It's kind of funny to see.
I am going to be wrong for like the next 2 weeks. It's just stupid. Just stupid.
Well, just
How's your Monday going, my friend?
well, it's been going rate or really great is what I mean by that. But no, I just also wanted to remind you, it is 2025, just so you're aware. So
I am catching up to that fact. I slowly but surely it is. I remember when I would write checks, it usually took me a solid month to get the right month down. So we are about 2 months into it. So that sounds about right. I think I'd be right on track for that. But what is, I'll say what's going off of track, and that's this attempted rally because we just straight up went into we just went into a red zone today, and it's not the end of the world. I'm kind of excited about it. For reasons we'll talk about here in a little bit, but for the most part, it was kind of a dud. If you take a look at this chart there, it went green here back in January 21st, and it just really couldn't get out of its way. It kind of ran into a high and then kind of rejected that, and then it tried again, and it was looking pretty good. I mean, we had DeepSeek, the market absorbed that quite well. We had the tariff threat from Trump. The market kind of absorbed that quite well. But it just kind of seems like it was a little too much as things kind of progressed. We got a really hard rejection of the high that we hit last week. Leading stocks are just selling off hard. Bonds are rallying up. So money is moving into bonds. So that you got the flight to safety there. And there's just not a lot of buying showing up in the market right now, and we're living below the VWAP, and that just kind of starts becoming a the VWAP is probably right here, and that starts becoming a self-fulfilling prophecy, because now if stocks start to trend lower, then people that bought up near the high, they're now trapped in losing positions. So that accelerates the selling. Then institutions start using their risk control measures more and start selling, and that just adds to the selling, right? And so it would be nice to see that kind of accelerate a little bit, kind of speed up the process. Like I said on the weekend review, the last thing we want is one of those long, drawn out 2-year bear markets that just grinds everybody down. And that's the last one we want. We want to see some strong selling. We want to see some support. We're going to do a little bit of review on that in our Arrow review for paid subscribers. Kind of shows some ideas of where support might be that has shown in the past, and that the market institutions typically like to buy into. And we'll use all VWAPs. It's the greatest thing, because that shows exactly what the average participant has paid since that point in time, especially when you anchor it, right? And so that's kind of what we like to do here at the Daily Stock Talk and at Empire Algo. We just strictly use the volume weighted average price because it gives us a really good idea of who's in control. And if the market can't maintain its average price, then it just tells you there's no buyers. And if there's no buyers, the market just can't go higher. So the red zone, that just means caution. It means we're stopping our buying. Not that there's anything to buy right now anyways, because leaders are just decimated. But if there are anything that does show up and pops up, we're just going to treat it as a watch, right? Just to see if there's any leadership that comes about. We are going to, the reason why I'm excited about it is because now it resets the clock. A lot of those leaders that made some really nice moves, you're seeing some sell signals, and that lets the algorithm start looking for buy signals. So because now you got a nice downtrend, and we're looking for that trend to break. And once that trend breaks, we'll be right there and we'll be ready for it. And we're already out. Like, I've got a majority of my cash already built up. So I'm ready, right? I'm ready for the next, bring it on. Let's just see how far this can go. Let's get some shakeouts. Let's get some leading stocks at some decent prices and get them crossing those VWAPs. That way institutions are starting to come in, and then we can just ride that next wave. But in the meantime,
let's get the bears out of the cave, get them fed, and then put them back in for hibernation so the bulls can run again.
That's right. And it's so I'm excited about it. I am not worried. I don't think what I think doesn't matter. What you think doesn't matter. But all in all, there's some concern out there, right? You have uncertainty, just broadly uncertainty. You have the geopolitical conversation. You have the Trump administration. You have the market sentiment report, which came out Friday, showing a higher expectation for inflation, and that was a big concern, particularly a couple of years ago. Is will inflation expectations become entrenched? And when those become entrenched, it kind of becomes a self-fulfilling runaway train. And that's the last thing we need, right? Then we're in the 70s stagflation situation. And nobody, that's not what anybody wants. So am I saying that's where we're at? No, but I'm saying that there's the potential there, right? And so there's plenty to be concerned about. But the good thing is when you pay attention to the market, you don't have to guess, because millions of people are doing the research, and millions of people are making their decisions. Institutions are making decisions. It's a global market now, right? It's not just a small thing. It's everybody across the world is feeding into this stuff. And if you pay attention, they're already doing the research. They're already making the decision for you. And right now, the decision is to sell. And so, we're jumping on board and getting out of the way and just seeing how far this can go. The NASDAQ composite had a 1.2% decline. It continues to trade off. It's further into its base than the S&P did, but it never really quite got out of its way. A lot of the mega caps that the composite is a big part of have really struggled these past couple of months. I mean, just look at Microsoft, right? NVIDIA, Amazon, those are just some of the bigger ones that have really kind of weighed this average down. And so like we talked about before, when we were seeing the S&P starting to hit highs, we wanted to see some support, some of that broaden out. Basically a confirmation. We wanted to see a confirmation that the leadership that the S&P was showing was being bought into by other indexes, and we just didn't see it. The small caps still continue to be below their VWAP, and they're trending lower. I mean, that's a pretty hard sell-off there. And then the same thing with the mid caps. And so it doesn't look great. We were really excited. The leaders there were some really spectacular moves these past couple of weeks, but it's all gone. I mean, it just got wiped out. I mean, Appfolio has almost done a completely round trip, and it gapped up over 30% in one day. And so I shouldn't say Appfolio, AppLovin, excuse me. And so it's pretty staunch, and we had a massive run of sell signals today. Which I haven't seen anything quite like that since I've been studying this model like this. And so it's very interesting. Normally when the market's really good, we could see 20, 30 breakouts in a single day. And we're seeing the opposite of that. I think we had well over a dozen, if not more, sell signals today. But we'll review that in the Arrow review for paid subscribers. But in the most part, we did see that continued flight to quality. This is the bond market. This is the IEF iShares 7 to 10-year Treasury bond. This is the bond fund that we use to kind of as a proxy, as a gauge of what the bond market is doing. And so bonds are continuing to be bid up. So we're seeing that money moving out of equities and moving into bonds. That's probably not a good situation to be in. The other thing that wasn't great was some of the recoveries, right? There wasn't a lot of strong moves. You would expect if some buyers were coming in, leading stock is down 10%. We're expecting people to come in and push that higher. And we just didn't see that today. Instead, our best performing stock out of the entire watch list, we have 200 stocks on our watch list. The best performer was Transmedics Group, up 7%. And it's hard to get excited about that chart right there, right? It's right at the bottom. Now, it is not, I should say, because it is potentially starting to make a move up, showing some relative strength, but it's a long ways away from being actionable. So not exactly the kind of rebound we want to see when the market just got punched in the face. So not only did the general averages continue to sell off, but there was just no action in really good quality stocks. There was a little bit of movement. Eli Lilly, which flashed a buy signal a couple weeks ago, is holding up pretty strong. And same thing with Apple. Apple flashed a buy signal a couple weeks ago, and it's hit a new high post buy signal. So that's a little interesting. And then, of course, Fox Corporation Looked like it was about ready to top out there, and then it just kind of psyched everybody out. Actually flashed another buy signal last week and hit a new high today. So not just, those are just one-offs, right? Those are kind of the outliers of the whole market, but overall, that's just kind of where we're at. Just not a good spot to want to be getting aggressive, to say the least. And there's a potential for a significant downturn here. And we'll review, like I said, in the arrow reviews, we'll kind of talk about where levels of support are and where they can possibly be. But that's kind of where we're at. The mindset quickly went from we're looking at potential new highs and seeing if we're going to get moving into a new run, to all of a sudden this thing is just being pushed down hard. So that's how quickly it can change.
And for those who do subscribe to our Patreon too, we'll talk a little bit about our cash strategy with the arrow signals as well. What JC and I do when we're looking at a market that has turned red, he mentioned it a little bit about, making sure that you get your cash out, you have your cash ready to go when the market turns and things are ready to start going up again. But we'll discuss that a little bit more in our arrow talk today as well.
Yeah. And other than that, Matt, where can everybody see us?
Well, you're here on YouTube with us, so make sure you smash that subscribe and that like button and share it with as many people as you possibly can if you got any great information out of this. If you are looking to get access to our arrow signals where we show stock showing strength or weakness and talk about how it could be a good time to either take a position or get out of a position, make sure that you subscribe on our Patreon, which is patreon.com/Empire Algorithmic Trading. Otherwise, Facebook, YouTube, Instagram, X, formerly known as Twitter, Blue Sky. You can get us everywhere that you get your digestible social media content. And then, of course, for more information, check out our website, Vwapvision.com, where we go into a little more detail about exactly what it is we like to do. But big thing, guys, we just want to say thank you for sharing your stock trading journey with us and being along for the ride as us two crazy guys just kind of get together and analyze things for you.
All right, very good, Matt. Well, happy Monday, and let's see what happens tomorrow. It should be exciting.
And as always, JC, happy trading, buddy.
Happy trading, my friend. We'll talk to you tomorrow.
Bye.